Hey everybody, how you doing? Welcome to our channel. Ron Melvin here, your East Bay real estate expert and realtor here on the East Bay. Now, in this video, we're actually going to consider one of the most important questions out there for buyers. Is 2025 a good year to buy a home? Now, we're going to consider this for first-time home buyers, folks upsizing, folks downsizing, and even an investor looking for the next project. We're going to consider trends in inventory. We're going to consider trends in pricing and interest rates and how they all work together to create opportunities for you. Now, one thing that's important, and spoiler alert, is there's some amazing opportunities out there in the market, and there's some amazing opportunities coming in 2025. Now, speaking about opportunities, if you're ready to start looking for your dream home, look around the screen. You're going to see a link to our free search site. Go out there, search multiple neighborhoods throughout the East Bay and throughout California. Also look in multiple price ranges and homes with different features to find your dream home. So hey guys, in this first slide, what you're looking at up here is annual prices year over year as of April 10th. So it's going to be April 10th, 2017 and compared to April 10th, 2025. Now, this is going to be focused on the cities of Concord, Pleasant Hill, Walnut Creek, and Martinez. Now, these cities are reflective of the entire Bay Area. Now, one of the things we want to make sure we're looking at is not the prices itself, but the trends. So one of the things we're looking at here, we're seeing a downward trend in pricing in 2025. Now, this means that if we're seeing a downward trend in this area, we're going to see downward trends in all other East Bay areas. So if we're seeing a downward trend in Concord, we're going to see a downward trend in the city of Richmond. We're going to see a downward trend in the city of Lafayette. So again, downward trend, lower prices. This starts creating opportunities for buyers. Let's look a little deeper into this, and let's look at what it is right now for what prices are on a monthly basis. So we're going to move over to the next slide. And what this slide actually is monthly prices, monthly average price. Now, let's look at the price in 2025. That's that dark blue line that's there. We see April 2025, prices have actually fallen below 2021 levels. We see that gold line, which is the highest we've had so far. That's 2022. Green line is 2024 and so forth. So lower prices, as prices are trending up because of the time of the year. We're in that buying season, but prices right now, if we look, have fallen all the way back to 2025 levels. That means there may be some great opportunities out there if you're looking as a buyer. Again, lower prices creating more opportunities. Let's take a look at our next slide here. Hey guys, in this next slide, we're going to really look at inventory. Now, again, we're talking about those 4 cities that I mentioned earlier, and this is months of inventory that's available. You see that brownish line that's up there? That's 2025. Now, there's a couple things we want to look at. First of all, that line sits higher than any other year that we see. That really tells us that inventory as of right now, as of April 10th, 2025, we've got some of the highest inventory that we're seeing out there. Now, this is months of inventory, and we're seeing over 3 months of inventory available. What that means for you is that as a buyer, there's many different choices. There's going to be less competition for each home that's out there. And let's look a little bit at what's causing it. If you look over that blue box, you see in 2025, we've listed over 1,200 homes in Central Contra Costa. That's more than we listed in both 2024 and 2023. We listed more than that in 2022, but one of the things we got to look at in 2022, there were a lot more buyers were buying a lot more out there. So we saw months of inventory was actually lower. So we're seeing a couple things here: lower prices, higher inventory. That's lower prices for buyers, more choices, less competition for homes. That's going to keep prices low. Let's take a look at the next slide. Let's pop our last slide up here. Now, this one is interest rates. And what this graph is actually showing you is the weekly average of 30-year fixed rate mortgages. That's the most popular mortgage out there. And if we look all the way to our left, we're seeing that interest rates are well below what the average is over the last 52 months. We see interest rates, they continue to gradually fall week by week. And we're seeing interest rates down as of this week as low as 6.62%. Now, we hear a lot of press out there and things like that. And one of the things we're seeing seeing in the market right now is the stock market is falling off. Now, one of the things that happens is the 10-year treasury is going to follow the stock market. So if we see the stock market declining, we're going to see the 10-year treasury bill also, or treasury note also falling. And that is one of the indicators that interest rates fall. So if we see that 10-year treasury falling and stock market falling, we're going to see interest rates going down behind it. Now, so we've got a couple of things in the market we see right now: lower prices, more inventory, and relatively low interest rate. This is going to create some opportunities for buyers. Now, if you're worried about the height of the interest rates right there, you're saying, well, Ron, interest rates are over 6.5% and so forth. Maybe it's not the right time for me to jump in the market. Remember, guys, you can always refinance when we're in a better interest rate market. But right now, one of the things that's happening is we look at price, we see low prices, and we see higher inventory. That's going to create more opportunities for you. Low prices, more homes on the market means less competition for homes. So you're going to be able to buy your home at a lower price right now and start to build equity in that home. You refinance down the road. Remember, one of the things is if interest rates continue to fall off, we're going to see more buyers coming to the market. Those more buyers are going to eat up the inventory on the market right now and start to drive prices up. So right now, because interest rates are relatively high, we can actually get some opportunities in there out there on the market right now. And when interest rates fall off, we'll refinance. Now, one of the things, if you are somebody who's buying or selling a home, you're thinking, well, Ron, I can't sell my home and things. Remember, we're going to buy and sell in the same market. So if we're buying and selling in a low market, the money you make is actually going to go into the next home, and you're going to start building equity in that home sooner. With higher interest rates, when interest rates do fall off and home prices start to go up, you're going to build equity in that home that you bought in the higher interest rates market. So again, great market out there, guys, for first-time home buyers. For investors, if you're looking to buy a home, prices are dropping off. If you're looking to buy or sell a home, you may not sell your home as much as you would have, say, a couple years back and things like that, but you're going to buy much cheaper. You're going to start building equity in the home. When interest rates does fall off and prices start to go up, you're going to be ahead of the game and you're going to be building equity in your home. So guys, again, if you're looking for your dream home, look around the screen. You're going to see a link to our search site free of charge. Go out there, log on, search multiple neighborhoods throughout California. Also search different features for homes, search different prices, and find a home that's right for you. And when you get ready, guys, reach out to me. Love the opportunity to talk with you about buying your next home. Okay, have a great time. I will talk to you guys soon. Bye bye.